Okay, let's dive right in. Welcome to today's explainer, where we're going to take something that usually causes a ton of anxiety and just demystify it completely. We are looking at the absolute foundational core of the US tax system, the Form 1040 and filing status basics. If you've ever felt intimidated by tax prep, or maybe just wondered how the pros make sense of all those crazy numbers, you are definitely in the right place. We're going to break down this vital document, clear up some massive misconceptions, and give you the confidence to understand exactly how a tax return actually comes together. But before we even look at the form itself, I've got a question for you that might actually surprise you. What single day of the year dictates your tax reality for the other 364 days? It sounds kind of crazy, right? An entire year of your income, your life changes, your financial decisions, all bottlenecked down to a single 24-hour window on the calendar. Keep this question in the back of your mind as we go, because the answer is going to completely change how you view tax strategy. So here is our roadmap for today. First, the master tax form. Second, choosing a filing status. Third, the December 31st rule. Fourth, inputting your income. Fifth, the 1040 math flowchart. And finally, number 6, avoiding rookie tax mistakes. All right, Section 1, the master tax form, the absolute center of the U.S. tax system. Now, officially, the 1040 is the U.S. individual income tax return, but I actually want you to think of it more like a final report card that you submit to the government. This single document is the main event. Every other piece of paper, every schedule, every random receipt you collect over the whole year, it simply feeds information back to this one master page. The Form 1040 is where the final calculation happens to determine exactly how much you owe, or hopefully how much you're getting refunded. Moving right along to Section 2, choosing a filing status. This is the starting line. So, the absolutely crucial point here is that your filing status is the foundation of your entire tax return. It literally dictates your tax bracket, your standard deduction, and what credits you even qualify for. If you get this wrong, the entire return is just a mess. Basically, there are 5 main statuses. Single means you're unmarried. Married filing jointly, or MFJ, is for married couples filing together, and honestly, this is usually the most beneficial status for couples. Then there's married filing separately, or MFS, which is often used for really specific legal reasons or maybe managing student loans. Next up is head of household, or HOH. Now this one offers much better tax rates than single, but you must be unmarried and paying more than half the cost of keeping up a home for a qualifying person, like a kid. And finally, there's qualifying surviving spouse, or QSS, for widows or widowers with a dependent child, which applies for 2 years after a spouse's death. Which brings us to Section 3, the December 31st rule, your legal status on the very last day of the year. And this brilliantly illustrates the weird reality of the tax code. Filing status is determined by the client's legal marital status on the absolute last day of the year, December 31st. You see, there's this massive myth out there that your taxes are somehow prorated. People think, well, I was married for 11 months of the year, so I should definitely file as married. No, the IRS literally only cares about exactly where you stand on New Year's Eve. If you get legally divorced on December 30th, the IRS considers you unmarried for the entire year. December 31st is the only day that matters for locking in that crucial starting line. Okay, Section 4, inputting your income, the money in. So for most folks, income is reported on a W-2 if they're a regular employee or a 1099 if they're an independent contractor. Now, back in the old days, placing this income perfectly on the 1040 was, well, incredibly stressful. But today, modern tax preparers have a major secret weapon. It's professional software like the GBC Worldwide Complete Tax Business System. And let me tell you, it does all the heavy lifting. You literally just answer some simple questions, punch in the W-2 numbers exactly as they appear on your screen, and boom, the system automatically fills out the entire complex Form 1040 for you. Section 5, the 1040 math flowchart, how the software actually calculates that final number. Let's pull back the curtain for a second on what that tax software is actually doing in the background. It's really just a logical, step-by-step math problem. Step 1, the software totals up all that gross income we just talked about, the W-2s and the 1099s. Step 2, it subtracts any adjustments. These are specific things, like educator expenses or student loan interest. That bit of math gives us a critical milestone number called AGI, or adjusted gross income. Then comes Step 3, the software subtracts your deductions, either the standard deduction or your itemized deductions. And after all that whittling down, you finally arrive at taxable income. And guys, this is the magic number. Taxable income is the actual figure the IRS uses to calculate what you owe. Finally, Section 6, avoiding rookie tax mistakes. navigating the minefield. Okay, here are the landmines that catch beginners every single time. First up, the typo rejection. You absolutely must verify the spelling of names and dependents against their actual social security cards. Why? Because the IRS e-file system is ruthless. I mean, if even one single digit of a social security number is wrong, the system will instantly reject the return. Second is missing W-2s. Sometimes clients get eager and want to rush and file in January before all their documents have even arrived in the mail. Look, if you file before a client has all their W-2s from different jobs, you're going to be forced to file a very tedious, very expensive amendment later. Just don't do it. And finally, there is the head of household trap. Let's look a little closer at this trap, because it is a huge point of confusion. You might naturally assume that an unmarried mother with a child living at her parents' house automatically qualifies for head of household. But here is the stark reality. Head of household requires you to pay more than half the cost of keeping up a home. If the grandparents are paying the rent and the utilities, she does not qualify. This is exactly why a good tax preparer has to ask those probing questions. Just having a kid does not automatically mean you are footing 50% of the bills. And speaking of head of household, heed this very, very firm warning. Never, ever let a married couple who are living together file one return as head of household and the other as single, just to manipulate the system and maximize their refunds. Listen, that's not a clever little strategy. That isn't a loophole. That is flat-out tax fraud. We follow the rules, we stick to the strict legal definitions of the statuses based on December 31st, and we report the truth. So you've seen the master form, you understand how filing statuses actually work, you know how to perfectly input the income, and you've seen the mathematical flowchart the software uses to land on your taxable income. But that brings us to our final, ultimate question for today's explainer. You've mastered the income, and the software did the math, but how do we legally maximize that refund? Well, the answer lies in the absolute magic of deductions and credits, which is a massive topic for another day, but for now, you have the foundational bedrock of the Form 1040 completely under your belt.